Guys, it's Carter. Welcome back to the channel. Hope you guys are all having a great and amazing day today. Now in today's video, we are going to be talking about how to use moving average lines to make money from swing trading in the stock market. So I hope you guys all enjoyed this video. If you guys do, hit that like button, subscribe. If you guys are new to the channel, new to the team, we talk about everything money, stocks, money management, trading, investing. So subscribe and join the team. And if you guys want to learn more about swing trading, we just released a brand new swing trading course where we talk about my strategy, my mindset, how I find stock. I'll put it down below, and we have 1 week left. 1 week left for the Black Friday sale, and you guys can get 30% off by using code THANKFUL. So make sure you guys check that out. Link down below. So check it out if you guys are interested. For swing trading, you guys will have access to the group chat and a variety of other quizzes, lectures, and strategies. So starting off is, what is swing trading? Well, swing trading in simple terms is when you buy a stock and you hold it for more than a day, but less than 1 year. When you buy and sell a stock during the same trading day, it's called a day trade. It's a different type of trading style, different strategy and mindset. Now, when you buy a stock and you hold it for more than a year, that's, in my opinion, a long-term investment. You know, those are different types of investing strategies. In most cases, most investors look at more fundamentals than technicals. Now, on average, I do hold my swing trades for about 2 weeks. Obviously, I will have instances where I hold them longer and instances where I hold them shorter. But on average, it's about that 2 week period. Now, what is a moving average line? What is a moving average line? Well, in simple terms, a moving average line is an indicator a lot of traders use to get a general gauge of where the stock has gone and where it can go in the future. Now, a lot of people love to use them, one, as trend indicators, so you can look at it and instantly know the overall trend of the stock. So looking at Google here, you guys will see the clear trend of Google just by looking at the indicators, even though we've had it go up and down, up and down, up and down. The second thing a lot of people use it for is support lines. Now, support is where we get a natural tendency of getting a lot of buying pressure near and around that line. So I wanted to show you guys an example of a trade that I recently was in, and this is on Google. Now you guys will see we've had this beautiful upward trend, which is always a good indication for a swing trade. The reason why is because you want buying pressure involved. Buying pressure involved and volume is very important when it comes to trading. So you guys will see that looking at that red line, it recently has hit that 200-day moving average line, which is that red line. It recently has hit it once, twice, 3 times, almost 4 times, and then recently it hit it 5 times. So for me as a trader, I understood this. Once Google stocks sold off near and around that line, I hopped in on a swing trade, held it to about 132, 134 area, sold some shares, and continued to hold as of right now to see if we can get a push back up to 140. But moving average lines are a great way to get a general idea of support and resistance. Now, when a stock is above it like this, we do see tendencies of getting support. Now, as we zoom out, you guys will see we've seen tendencies of using it as resistance, where it hit that same red line, but it got selling pressure instead of buying pressure. Now recently crossed over, and then we started that buying pressure back up. Now it was also using it, you guys can see here, and as we continue to look at it, you guys will see that it just loves to get either buying pressure or selling pressure around that line. Now, the great thing about this is understanding this easy study is a great way to get a general idea and gauge of should you swing trade it. Now, obviously, a lot more goes into should you make this trade than just looking at the moving average lines. You have to kind of understand what's going on inside the business. Is there volume? Yes, look at the RSI line, look at other indicators. The 2 moving average lines that I always pretty much use are the 200 and the 90. Both are absolutely fantastic. Now, we can pull up one other one. This one here was a swing trade that I haven't done, but this is just another clear example of how you guys can use moving average lines to make money. This one here is on SYM. You guys will see it came in contact with that 200-day moving average line in the past, right? It established it right down in here as heavy support. So you guys will see it hit it once, and as we continue to go up, right, it hit it twice, 3 times, 4 times, 5 times. So just by understanding this one rule, you guys could hop in on that trade, hold it, and then obviously we've seen great growth, stock going from about $32 all the way up to about $53. Now, moving average lines, how the line actually forms is really interesting. So this is the 200 moving average line. So what it does is it takes the past 200 days closing prices and merges them together to form this line. Now, the 90-day moving average line is the past 90 moving average line, or 90 days closing prices merged together, and that's how they form that line that a lot of traders use to get a general idea of where the stock is going and how you can trade it. But overall, guys, this is just two examples of how you guys can use moving average lines to make money from swing trading. I hope you guys all enjoyed this video. If you guys did, hit that like button, subscribe, and we'll see you guys in the next one.